What's up guys, and welcome to another episode of Drive to Thrive. In today's video we'll be discussing Shopify. Now this one is going to be a little bit longer than what I usually do, so if you guys want to skip around, check out those chapters down below. But in this one we'll be looking primarily at the charts, some financial reports here, doing a little bit of what the insiders have been doing, and as a bonus I'll do a trade of the month here, so make sure to watch all the way till the end. Guys, if you're finding some value in this video, or if you're just appreciating the effort that goes into making this stuff, please consider smashing that like button, as it does help out a lot. And while you're at it, why not subscribe and share this with your friends and family. But otherwise, let's get started. Alright, so looking at Shopify here on our weekly chart, let's start off with how far are we down. So since the peak here of around that November 15th down to the current price here, we are down around 80%, 79%. So really nice discount if you're a long believer on Shopify. Now, if we see this chart, I got a couple of green zones highlighted here. So one is between this $380 and around that $290. So this is my zone number one for accumulation. This is where I started buying some shares of Shopify because I think this is starting to get a really nice attractive price here. So my next green zone here is somewhere between this $180 and $120. So if we end up breaking this support level here at around that 300 bucks, then look for us to pull back all the way down to that 110 to 170 area like I mentioned. But also don't forget that there is a stock split happening on June 29th here of 10 to 1. So whatever the prices I talk about, just divide it by 10. So at the current price of $353.66, after the stock split, the price would be $35.36. So let's take a look at some of these levels here and what to expect. Now, after the stock split, I wouldn't be surprised if buyers start to come in. It is going to be that much cheaper, so more average individuals can buy into these shares. Also, options are going to get cheaper, so maybe we'll start to see that volume. And this is when we get that Shopify to start running up, making those higher highs. But even if we just stop out around that $596 here, guys, we'd still be in the bearish momentum. We'd still be in the bear channel here. So keep an eye out for this. That's why I don't want to pile in all right away at these prices, because what if we sell off from here and just end up breaking this lower? So that's why I'm waiting for that next confirmation. If we top out around that 580, 590 right here, then look for this thing to come back down again, possibly retest the $300. And if we hold it the second time, that gives you that confirmation to start buying more shares here and going a little bit heavier. But until then, it's always a risk to go 100% at these prices. Now, looking at the 200-day moving average, this one's coming down, currently sitting around that $871. We haven't tagged that 200-day moving average yet, but I'll show you a little bit later that this is quite often we do end up rallying back up and using it either as resistance or support. Now, if I change this to our 50-day, this one seems to be the one that's been following the most. Now, anytime we come up to that 50-day moving average, we end up using it as a resistance again here around that March. So does the same happen here? We just use it as a resistance and sell off. Possibly, again, keep an eye out on that. Now let's go over to the weekly chart and let me show you what I mean with that 200-day moving average and how likely it is that we'll come back and retest it from the bottom side. So if you guys can see during this bull run right over here, you know, we used it as support every time. Now, if we did get overextended to the upside, you know, like back here in September of 2019, we came back and retested it. Then we got overextended again in February 2020, came back down and retested it. Got overextended again here on February 2021, came back and retested it, overextended, right? And look how overextended we are to the downside. So that's why I'm expecting this to move up and try to peg that 200-day moving average, maybe not exactly, but at least close to it. So that's why my upper price target for Shopify is sitting around that $870. Now after the stock split, it'd be around $87. So that is my price target for Shopify on the low end. I believe we can definitely go as high as we used to be, around that $1,600 possibly in a few years. You always got to have that long-term outlook, 3 to 5 years. Now let's get out of here and let's see what those stochastics and the MACDs are doing. So On our daily chart here, the MACD is still below the zero line here. We sold off just over here, it came back up. Now we do have that crossover. Let's see, can we move past the zero line finally, or do we end up getting sold off here? Now, if we look at the stochastic RSI rotating off of this overbought territory, let's go over to our weekly chart. So on our weekly chart, we don't have that crossover yet. And if you want to be patient and you want to wait for that crossover, it's definitely one of the ways to just give you an indicator. Now, as always, these indicators aren't 100% accurate. It's just something to give you that little peace of mind that yes, we are indeed turning into a more bullish trend right now, and possibly there could be more upside ahead. So keep an eye out for this weekly crossover on the MACD. And our stochastic RSI currently is in this no man's land, so it's either will come back all the way down again, or possibly we'll start to see this thing run up higher. Finally, let's go to the monthly chart here. So again, super extended on our MACD here, and I wouldn't be surprised if we overextend to the bottom side now and then end up coming up. Our stochastic RSI is flat on this chart, so forming another red candle here. Let's see if we do find that support. So far it's not looking 100%, like this thing does want to run up higher, so again, be patient and don't go all in. Now let's take a look at some of these financial reports and let's see how these guys are doing. So this is as of March 31st, 2022. So their gross margins around 53%, operating margins about 1.07%, net profit margins 3.77%, and return on investment 1.69%. So overall, all positive numbers, and that's what we want to see. Now, these numbers looked way better after this March reporting came out, but still not too shabby. Now, their total debt to equity is sitting at 9.31%, so low debt to equity, so that is good. And their operating cash flow currently sitting at a negative 7.85%, but again, this was a positive number before this March reporting, so hopefully after a few months, we do get those numbers to turn back positive again. Now let's go over to our market beats here and let's see what the analysts are rating this company. So as of right now, we got 36 analysts covering Shopify, so quite a bit of these people. Now we do have a buy rating and a price target of $924.83 for an upside of around 161%. So pretty nice. Again, keep in mind after the stock split, this price target would be $92.48. Now, currently, out of the 36 analysts, we do have 20 of them with a buy rating, 15 with a hold, and just one person with a sell. So overall, looking nice. Let's go over to institutional ownership. So institutions in the first quarter of 2022 have done a lot of selling, about 132 billion worth compared to only 5.13 billion worth of buying. So lots of selling happened in Q1. Now, if I go back down here, you'll see that the most current reportings go to June and May, so I won't really get those Q1 numbers. I don't know who's done a lot of selling, but let's see what happened here, at least in May and June. So overall here, we have a nice big sale here of $42 million worth, about 48%, 49% of their whole company ownership of Maria Asset Global Investments. Then we got Gradient Investments. These guys sold about 51,000 worth, so nothing too crazy. Now let's move down. Let's see some other big numbers. So we have $36 million worth of buying happening here from Neuberger Berman Group, and about $332 million worth of selling by the manufacturer's life insurance company. So overall, looking back at the past month here, it does look like more selling than buying happening on Shopify. Now let's see what the insiders are doing, but for this one, I'll have to go over to the TSX Shopify because unfortunately they don't have insider trades analysis for that New York Stock Exchange listing. So if we look over here at Q2 so far, we have $14 million worth of buying versus 284,000 worth of selling. So looks like way more people buying than selling, and let's see who the buyers are. So looking down, we got two buys right here. So one by Harley Michael Finkenstein, around $1.3 million worth Canadian, and then the other person is the director himself, Tobias Lutke, of around $13 million. Now this could be many reasons why somebody loses their positions, just like if we look up here on May 24th, after just a few days of holding on to this position, Harley ended up selling about 153,000 worth, so who knows why they sold, but there's always just one reason for somebody to buy. It's because they believe that the price is undervalued and that the company is going to be growing in the future. So it's always nice to see those insiders buying, especially the director himself, because that gives me optimism for the long term. Now let's take a look at my monthly trade here for Shopify. And if you're still with me here, thank you so much. Thank you for sticking around. Let me know in the comments that you're still here. And also consider smashing that like button if you like the content so far. Now the trade I want to show you guys is a bull put spread. Now I like to do these spreads in this kind of environment because it doesn't matter if the market's going down, if the market's going up, if it's neutral, you can always make money on time decay here. And that is a big one here. So for this example, I chose the one that gives me the best kind of spreads and risk to reward. So I called the bottom here at around $325. So if we go over to our weekly chart, today we're sitting at about $353. So I'm calling the bottom at $325, which is somewhere down here. Now, the more the stock falls, now let's say Monday, the stock goes down another 5-6%. Tuesday, it goes back down past that $325 and you haven't bought yet, then you can look at a lower strike with the same kind of credit spread on this trade. But you can definitely try and call the bottom here anywhere between that $325 and $300. Now, if we go over to my option chain, so just for this example again, because I'm doing this over the weekend and the markets aren't open, I'm using the $325 strike to sell, and I'm buying a protective put at the $315, which gives me a spread of around $220 credit and a $780 risk. Now, if we go and hit this trade button right here, then you can see that we're way too conservative. Now, if we go over to the midpoint here, you can easily try and get, let's say, around that $320 credit, which means that your overall risk would be $680 on this trade. Now, I don't want to go into too much depth with this strategy. If you guys would like me to put out a video or perhaps do a live stream or something when we discuss these different strategies and how to use credit spreads, then let me know in those comments below. But that is it for today, guys. Thank you so much for sticking around. Please consider smashing that like button, subscribing, and sharing with your friends and family. And if you enjoyed this video, then make sure to check out my take on light speed right over here. And if this isn't your cup of tea, then check out my 5 tips on how to prepare for the next recession ahead. Thank you so much, guys, and see you in another video.